Most people overcomplicate their trading, but if you want to get funded in 2026 and go full time like I did 2 years ago, it's actually a lot easier than you think. You see, most people will convince you that you need a super overcomplicated strategy with dozens of different concepts, but I actually made the most money in trading when I simplified things as much as possible. Now, over the past 5 years, I've literally tested hundreds and hundreds of different strategies, indicators, and concepts. And it turns out the one that I use day in and day out and have done so over the past 3 years, which allowed me to go full time, was actually the simplest one. I actually follow 4 simple steps every time I come to the charts. And in this video, I'm going to be breaking down exactly what those 4 steps are in a simple and mechanical process that you can follow every time you come to the charts. I'm also going to be giving away my full trading plan document and going through all of the costly mistakes that I made. Had I known these, would have saved me years and a lot of money as well. Alright, so this first step is the biggest one and it's the most important, because if you can understand this, everything else after this will just fall into place. So the first step is actually just to identify, very simply, higher time frame, market structure and direction. So here on GBP USD on the 4-hour time frame, we can see that price was overall bullish. We had this bullish change of character right here. Price had then retraced back down, held this area of demand down here, which was also the swing low. Price had then proceeded to, again, create some more bullish structure, broke this high right here, and had overall as well created some very nice bullish volume. Ideally, when we are looking for these longs, we want to see this clear volume coming into the market, because the volume is indicating to us that price does want to go higher and doesn't want to kind of slow down and reverse on us, right? So that is very simply step one. We're identifying higher time frame, market structure and direction, marking on the key breaks of structure, the key higher highs, higher lows, or lower lows and lower highs in a downtrend. Now, if we also just take a quick look at some of the very high time frames, we can see that this was in alignment with the buying opportunities, because we had on the weekly time frame this weekly bullish retracement, and then significantly recently we've had this kind of pullback phase, but it was very slow and corrective. Notice how when price was coming down, it wasn't really creating any imbalance. It was very kind of efficient, choppy and slow. Once it had taken out these 2 equal lows right here, we then started to see that reaction to the upside, and the buys were then confirmed when all of the lower time frames, 4-hour and down, basically shifted back bullish just here. This was the original change of character. For anybody unfamiliar, that's just when price creates a higher high in a downtrend, signaling that that downtrend has come to an end. We then had price come down, hold this low and create a new breaker structure. Alright, now so this next step is one that most people overcomplicate, which should actually be the simplest step in this whole system, right? Now the next step is very simply to identify any point of interest, right? Now, what do I mean by point of interest? Because that's very ambiguous. Points of interest, very simply, and I've made this strategy as mechanical as possible, like I said, because one thing that I personally find is that discretion holds most traders back, because they don't have the chart time in order to involve discretion in their trading. So discretion, as much as possible, obviously we can't eliminate it entirely, but it should be removed to the best of our ability. So we should be looking for a mostly mechanical rule set. So in order to make this as mechanical as possible, what we are looking for in terms of a point of interest is a sweep of Asia session low, and we're looking for price to come into a valid demand zone below the Asia low. So here we can see that in this overall bullish market, we actually had, if we go over to the 45 minute, it was probably clearest, we had this area of demand to the left, and we also had Asia low being taken out in London session, and we had this previous day low swept into the demand zone as well, right? That is our point of interest. And in general, what we want to see as a point of interest is very simply, if we type this out, Asia low or high taken. Obviously, if you're looking for sells, we want to see the Asia high taken instead into a demand zone or a supply zone for sells. And we are of course aligning this with the higher time frame market direction. So if price is bullish, we only want to look for longs from a demand, and if price is bearish, we only want to sell from a supply. What I'm not doing, and what I see a lot of people making the mistake of doing, is, for example, if price is overall in a bullish market like this, they will look to the left, find a random supply zone like this one, and try to sell from it. Nearly always that's not going to work, because it's just a random area to the left. It has no real significance. So what I would simply be looking to do is follow this higher time frame market structure and direction. Also, the powerful thing about this system is that even if price is not going to reverse completely and head back to the highs from this area. Because it is such a significant higher time frame liquidity, it's very often a high probability that price is going to at least give a reaction out of these areas. So for example, even if price did something like this and continued down, meaning that we were actually wrong, we could have still capitalized on this bounce because we're looking at these liquidity levels where we know there is a high probability of price reacting. Now, obviously, we don't want to just randomly buy or sell from these levels, which brings us over to step 3, which is the lower time frame confirmation. And once again, this is something I see too many people really overcomplicate when it should just be as simple as possible. So to make this as simple as possible, here are my rules for that lower time frame confirmation. Number 1, we jump over to the M5 chart. It's always the M5 chart. That's very important. I'm not using the 3 minute. I'm not using the 1 minute. I'm not going higher to the 15 minute. I am using the M5 on every single trade. Once price has swept Asia low into our point of interest, which in this case is this demand, we also had previous day low swept as I mentioned. What we are simply waiting for on the M5 chart is, if we're looking for buys, price is obviously coming down in a bearish trend, right? Looks like this, lower lows, lower highs. We are waiting for an M5 change of character, which is simply when price creates a higher high in this downtrend. So here we can see that price was overall, if we just mark on the structure, coming down, bearish market structure, creating lower lows and lower highs. But once it came into our point of interest and swept the liquidity, we had price create this higher high, right? And what I want to see here is actually a closure above the structure. We don't yet have that, so let's fast forward price on a bit. Okay, there we go. So now we have it. We've had a closure above structure. Notice as well the very nice volume coming in here. Ideally for an A+ setup, this is what you want to see. Very clear volume coming in, but with clear imbalance created. Now in terms of the actual entry, all I'm looking for is the following. M5 change of character, imbalance, right? Just those two things. It's as simple as that. I'm not overcomplicating things. Like I said, I only want to see M5 change of character plus imbalance. Now, in terms of the actual entry, what I'm looking to do is enter anywhere in this imbalance, which actually makes sense. So obviously, just to explain this a little bit more, if we enter all the way up here, obviously we have had a change of character plus imbalance. But if we enter up here, the stop loss is going to be huge and the risk reward is not going to be worth it. So what we want to do is wait for price to retrace into a 50% of this leg. Like I said, I'm making this as mechanical as possible, so it's easy to repeat. So we're going to set a buy limit on this 50%, stops below the low, and we are going to crucially, and this is step 4 of the trading plan, stops below the low, mechanical 1 to 3 take profit, right? And also guys, just to show you real quick, this is not a trade that I've just cherry picked in hindsight. This is actually one we did take in the group, which I'll put a screenshot somewhere on the screen as proof right now. Which did end up playing out and hit full TP for 3%. But yeah, regardless, what we're looking for in terms of the entry, like I said, just to repeat this, M5 change of character plus imbalance, retracement into a discount, mechanical 1 to 3 take profit, stops just below the low, and it is as simple as that. And what often happens, guys, as well, is price will not immediately pull back into your entry, but it will, for example, create some inducement like this above the entry. If that happens, what I've personally found is that it actually increases the chance that your trade will play out, because this again is liquidity built up, which we know once it's taken out, there is a high probability that price reacts from. One thing I also do not like to do, which I see a lot of people doing, is they will try to get a really over refined sniper entry from, for example, this demand. They'll try and get a 2-pip stop loss or something ridiculous like that. But this is not a very realistic approach. You're going to get stopped out by spreads, and the majority of your trades are just going to lose because you're not allowing the trade enough room to actually develop and play out. So like I said before, I'm very happy just to enter on the 50%. I'm not looking to get a really over-refined sniper entry. So let's go through the second example, like I said, when things are a little bit less clean. This one was on gold, and again, I'll put the screenshot of this trade up on the screen as proof that it's not just cherry-picked in hindsight, and that we did actually take this trade in the group. Right, so first of all, zooming out to higher time frame, here we're on the daily chart just to gain that perspective and to see where higher time frame is heading. And once again, this is step 1 of the trading plan. We've seen price come down, sweep these daily time frame lows in an overall bullish market. Again, just notice how parabolic and how much momentum price had prior to this pullback. When we see momentum like this, we've got to ask ourselves, is a move down like this likely to be a complete reversal, or is it likely that this is just a retracement phase for price to eventually continue higher? Most often when you have that much momentum and also the fundamentals aligning, we had obviously some kind of war news that catalyzed this move up as well, along with fears about rate cuts and things like that at the time. This basically caused price of gold to go up. We had price come down, react from this area of demand just here. Now, jumping over to the 4-hour chart, because there's not really too much else to see on daily chart, we can see that once price came into this demand, obviously at the time we did not know price was going to flip back bullish here, but we had price develop and confirm this to us when we had this bullish change of character. Price then came down, held this area of demand right here, and then created a new breaker structure. Now, as before, what we want to do in step 2 is identify a point of interest where we're going to look to buy. Here, in this case, we had this 4-hour demand zone that price was reacting from. And also, another tip for you guys, right? I see a lot of people making the mistake that when price is here, they would, for example, identify this as a point of interest. But the reason why that's not a good idea in most cases is because you're going to end up missing a lot of trades. Price is not very likely, if you have momentum like this, to come all the way down to this point, at least at this moment in time, right? So we should look at some nearer term points of interest, like this one, and react to price. One thing I always tell the guys inside the community is don't try to predict price, try to react to it, meaning have a few different areas in mind where price could come into, and then observe price in those areas. If it presents a confirmation, we execute without overthinking, and if it doesn't present a confirmation, we can then look at a lower point of interest, such as this one down here. But in this particular case, we can see price come into this area, it then starts to react. Now, if we go over to the lower time frame to analyze the structure in more detail, we can see that once price came into this area, if we play it on a little bit more, we can see that eventually we had price come into this area. So we can see that eventually, after price tapped into that demand, we had this change of character on all of the lower time frames, 30-minute and below. You can also see it on the 1 hour as well if we jump over to the 1 hour, right? So what I was looking for after this was essentially a retracement into an area within this range between the low and the high. Keep in mind that this is now our point of interest that I want to look at for longs. So we had this area of demand at the extreme that I saw price come back into and start to react from. Obviously, like I said at the time, I did not know this area was going to hold, which is why I observed price in this area and monitored for a confirmation. So once again, for the point of interest, we're looking at an area of demand beneath the Asia low. Here we had this one right here that got swept. Now we are on the M5 chart and we are simply looking for an M5 change of character. At this point in time, you can see the structure coming down was bearish. So we have to be patient and wait for this high to get broken. That is the current lower high in the downtrend. Once this is broken, which you can see does eventually happen, we are then looking for an area of imbalanced demand. Here we had this whole region. The reason is this whole region as well, by the way, is just if you look on, for example, the 30-minute, you can see that this whole area here was the demand. Sometimes it's a little bit harder to see on the M5, so I will zoom out a little bit just to make it a bit clearer. But the actual confirmation, like I said, to keep it as mechanical as possible, is always going to be this M5 change of character. Once we have this, plus the imbalance, which you can see price created here, we're setting a limit on this area, stops just below, and we are going to mechanically target a once free risk reward as always, and simply let the trade play out to stop loss or take profit. In this case, you can see this trade eventually does come down, very kind of slow corrective pullback, which is what we want to see, and then price eventually does go over and hit TP. Like I said, no break even, so even if this had touched back at break even, we would still be in the trade. Okay, so third and final trade example, this time on Euro USD. By the way, guys, the pairs that I trade, I forgot to mention, Euro USD, GBP USD, and gold. Those are the ones which I've personally found the strategy works best on. But a couple of the guys inside the community also trade this on indices and Japanese yen pairs as well. So it can be applied to any pair. Now, here on Euro USD, we can see that very clearly in this case, price was in this bullish trend, right? We don't really need to look at anything else. We can just see that price on the 4 hour was creating this very clear bullish structure and momentum. This was our most recent breaker structure after price had retraced down and reacted from this demand. Also, again, pay attention to the momentum that we have. very clear bullish momentum. Just look at the imbalance that price is creating. This is ideally what we want to see if we are looking for longs. If you also look to the left, and this is one of the kind of things that I will repeatedly look at, is based on this where price is coming to the left, I ask myself, is it likely that price reverses out of this area? Here, it's just like a random area, right? It's not a supply, there's no liquidity being taken out, so it's highly unlikely that price is going to reverse from this area. You can also see that the higher time frame macro trend on daily was still overall bullish, right? We had price originally come down, react from daily demand down here. We then had this retracement phase, but once price took this last liquidity here, we then had it shift back bullish on lower time frames and continue this very bullish momentum. So based on this, we are now expecting price to target this high because the overall daily trend has held. And again, very clear bullish momentum. Even if you weren't aware of structure here, you could just use purely the momentum to identify the fact that price was bullish. Now, this brings us on to step 2, which is to identify the point of interest where we are going to look to buy from. Again, we want to wait for Asia low to get taken out into an area of demand. In this case, we had this demand zone right here. And like I said before, I'm not trying to predict price. I'm having a few areas in mind and I'm reacting to it. So in this case, we also had this 4-hour one slightly lower, which was also a valid point of interest if price was to come into it. But one thing I was thinking here is that because we had this very kind of slow, low volume pullback, we would likely see a smaller retracement for continuations higher. Now, later in the day, in New York session, we can see that price came down, tapped into this point of interest. Asia low has been taken out. So this is when we were on the M5 chart and we were looking for an entry. Again, very simply for the entry, we're waiting for this M5 downtrend to come to an end. Here we're creating lower lows, lower highs. At this point, when it came into point of interest and swept Asia low, we had price create an M5 change of character just here. Now, once we see this, again, what we're waiting for is a retracement into a discount. So, drawing the fib tool from the low to the high, here we can see that the 50% was here. I'm looking to execute anywhere below that. Stops below the low, mechanical 1 to 3 risk to reward target. And the reason why I'm entering slightly lower than the 50% in this case is because we have this very obvious liquidity resting above the imbalance, so I wanted to get a slightly more refined entry. But if you want to keep this purely mechanical, I would enter on the 50% on every single trade no matter what, just so you can eliminate that element of discretion as much as possible. Now, if you want to go a little bit deeper and see more trade examples, my gold backtesting playlist is one of my most viewed playlists on my channel, is one of the most popular and helpful playlists that I've ever made. So if you want to see many more trade examples and feel like there's still something missing after watching this video, click here to watch the gold backtesting playlist next. And as always, guys, I'm trying to provide as much value as possible in these videos. So if you are a struggling trader, make sure to subscribe to the channel and I will see you guys in the next one.